Afternoon. Happy Sunday to you. It's February 8th. We're going to look over a few items here. This is SPY, the S&P 500. These are monkey bars that Thinkorswim uses here on their platform. Basically what this is this is amount of volume traded at a certain price. And for this is 2015 and this is all of 2014. So for January and part of February, here's where we're at in relationship to last year. You can look at this as a strong level of support. And set an alarm while I'm at it. This is another level of support. Alright, what's that? 197, and this one here 187, 197, 187. Okay, and for inside, so 202. So approximately, if SPY can hold above 202, the trend is still up on it. And I know some of you, as myself, were playing the short side on Friday, looking for the market to roll over, but looking at the big picture here, this is where we're trading, which is in this way. And I look at this pretty much as a pause before going higher, because as we saw in the previous, that's the monkey bars standard. In the previous, or this chart, actually, we can see that the S&P has been trading sideways since November. So usually when you get a sideways pattern, you're going to get a breakout. That's the best thing about sideways markets, is that you'll eventually get a breakout. And as you can see, it's sideways here. So up, down, up, down. And I believe in the big picture, though, is that we're trading below the previous high. Yeah, okay. Whoops. Alright, so previous high here. Okay, so this would be the goal of 212. And I posted charts earlier that showed the weekly working at 217, 238, I believe, on the upside. Friday's action, we closed up at greater than 206. School of thought here: up, down, up, down, up, down. Here we are a little bit higher, so we're making a higher high. But it'll all come down to basically Monday's action. I'm going to guess that we're going to try and move this thing higher, because that's where the most pain is. Who really wants all-time highs? You know, who really wants 40,000 on the Dow? Well, technically we all really do, but folks are putting in their own biases to whatever it could be, but it's all on the chart. I don't have time to decipher all the biases out there. So for looking at this here on the SPY, it looks like it's still sideways, but with the possibility of breaking out and making new highs. In one school of thought, though, is that when you look at SPY, for me, as a seasoned technician, is we made a new high, and now we're pausing below it. Now, technically, that could be construed as distribution. There's distribution going on. I have to assume that the trend that's been going up since from the beginning is we're still continuing higher. I don't see a peak in the stock market until the next real estate peak in 2024. And real estate is an 18.3-year cycle, so we still have more time to go. But we do have a recession or two in between now and the end of the big cycle over the next decade. So in one school of thought, that this is a distribution pattern. Now, if it breaks out here, it'll run sharply higher, but if we know if it breaks down here, then it'll probably surpass this on the downside. And on a weekly chart, things begin to line up a little bit easier for those for bullish tint to it.